Hey everybody, Real Estate Ninja here. I hope you are doing great. I know this is not my normal backdrop. I am actually on the set of our new channel. It's called This Will Make You Rich. If you don't mind hashtagging it down below and checking it out, maybe watching the video and hitting the subscribe button, I really appreciate it because I'm about to change the financial frequency of America. All right, we're gonna talk today about companies, whether they be profitable or not, because we got two types of companies out there, right? They're either making money or they're not. Both of them, both types of companies now are making cuts in 2024. This will be CNBC, this is where the story is, the year of cost cutting. All right, that's very important. Why? Because one of the most important cost cutting a CEO or any of the C-suite executives know is wages and personnel. All right, and that is exactly what the Federal Reserve wants. Check this story out at CNBC. Corporate America has a message for Wall Street. It's serious about cutting costs this year. From toy and cosmetic makers to office software sellers, executives across sectors have announced layoffs and other plans to slash expenses. Even at some companies, they are turning a profit. Barbie maker Mattel, PayPal, Cisco, Nike, Estee Lauder, and Levi Strauss are just a few of the firms that have cut jobs in the recent weeks. Please let me know if your company is going through cost cutting right now and put down the company down below. I'd love to check it out. There's a lot of quiet firing going on as well as companies don't want the press now. Last year in 2023, that was the year that companies wanted the press of firing people. Why? Because it was taking their stocks and going poof. Now, the media has finally figured it out, or I think general public, that's not a good thing. Why would we want to buy your stock? Sure, you're cutting costs, which means your margins are going to change, but you're having to cut costs because you are unable to make money. You're making less money today than you were yesterday. Okay, so Wall Street's figured this out. Department store retailer Macy's said it will close 5 of its namesake department stores and cut more than 2,300 jobs. JetBlue Airways and Spirit Airlines have offered staff buyouts, while United Airlines cut first-class meals on some of its shortest flights. As consumers watch their wallets, companies have felt pressure from investors to do the same. Executives have sought to show shareholders that they're adjusting to consumer demand as it returns to typical patterns or even softens, as well as aggressively countering higher expenses. Look, here's the truth. Take a little break from this. It is time to position yourself through diversification, saving money and all that stuff to pounce, okay? As companies continue to cut more costs, people are gonna have less jobs. They're gonna start selling their stuff. I'm already seeing it in Facebook Marketplace. High-end stuff is finally hitting the market. I made so much money in the Great Recession buying up stuff from people that were leveraged in debt, that just kept blowing money like drunken sailors, and companies that did the same thing. And I want the same for you. Guys, little note down below, it's the last week. The Side Hustle course will be $199. Then it goes up after that. This is the time to take advantage. Start your business now and start it small, start it slow, start it with cash. And honestly, you could build $1 million business in one weekend. You just got to figure out what you're going to do and do it. And I give you the blueprint. So I can tell you this. I'll give you a money back guarantee if you don't watch more than 50% of the lessons in the next 14 days. But I'm going to guarantee you that if you do it all, you listen, you do it, you're going to make hundreds of times the cost of that course. All right, that's down below. Now let's get back into this. Companies in past years could get away with passing on higher costs to consumers who were willing to splurge on everything from new appliances to beach vacations. But businesses' pricing power has waned. So executives are looking for other ways to manage the budget or squeeze out more profits, said Gregory Dacko, chief economist for EY. If he's a chief economist, he's probably wrong all the time. I don't know. Type 1 if you agree with that, because that's the news story of the 2020s. Economists are wrong. He says, though, you are in an environment where cost fatigue is very much a part of the equation for consumers and business leaders, Dacko said. I'll say hi to Dacko. I'm sure he's watching this video right now. The cost of most everything is much higher than what it was before the pandemic. Well, copy, Captain Obvious. Whether it's goods, inputs, equipment, labor, even interest rates. There are some exceptions to recent cost-cutting wave. Check this out. I'm going to add to this. Just so you know, I don't read these videos, these stories, before I read to you. And I'm not even that good of a reader. Walmart, for example, said last month that it would build or convert more than 150 stores over the next 5 years, along with a more than $9 billion investment to modernize many of its current stores. So let me just throw this out there, because they're not going to say this in the thing. Well, that's really good for Walmart. Well, you know what Walmart's doing? They got robots running around the aisles now, checking your, body scanning you and scanning your face and checking to see if you stole anything. That's cost cutting. Because sure, the expense looks like a lot right now, but think about it. For every one robot, we could fire 3 people. They don't tell that in the news, right? The other thing that Walmart's not telling you in their big expansion, right? They're grabbing market share from customers that would be shopping normally at Target. Thank heavens, once you go woke, you go broke. So when Target went woke, a lot of their customers went over Walmart. But it wasn't just that. And trust me, Walmart's woke too. Can't stand them either. But here's the thing. Walmart's a bigger buyer than Target. Their prices are lower, so you're seeing a higher end clientele for big box stores, customer moving over to Walmart out of necessity because inflation has completely squeezed their budget, right? So they won't tell you that. Okay, it says here, and some companies such as banks have already made deep cuts. 5 of the largest banks, including Wells Fargo, Goldman Sachs, together eliminated over 20,000 jobs in 2023. How do you like that? I have subscribers and my heart goes out to you. I've been warning about this. And that's why I talk about starting a side business, a side hustle, getting a secondary job, things like that, because I have subscribers that have been telling me for the last year that they've been laid off, and my heart goes out to you. But this is what I also get excited about. If you're a man or woman of action and you're ready to go crush it, the world's your oyster right now. If you change your financial habits just a little bit right now, you're going to absolutely dominate it during this next crash. And we're already in the crash. See, that's what people don't tell you on CNBC. Jim Cramer just wants to lie to you and sell you a bunch of stocks for his crony buddies. They're not telling you we're in a crash. Type 1 if you agree with that. I believe we are in a real estate or an economic crash right now. Type 2 if you don't believe that and you think I'm a nutball. It's okay. We can still be friends, sort of. It would be awkward, like a junior high dance. But think about this. The reason why I know the economy is crashing is because companies are scaling back, they're laying people off, they're making less profits. It's that simple. And it's going to get worse. It's going to be a self-fulfilling prophecy. I hope you understand what this means. Hey, is Kevin the lead man in here? Just check real quick. Let me know if Kevin's in this thing. My point being is this. We're seeing a point in time where people are getting laid off and you have a choice. You're either going to sit back and take it. About 10% of the nation wants to do that right now. Or you're going to be a man or woman of action. What's the answer? It says here, but the cost reductions unveiled in even just the first few weeks of the year amount to tens of thousands of jobs and billions of dollars. In January, U.S. companies announced 82,000 job cuts. More than double the number in December, while still down 20% a year ago, according to Challenger Gray and Christmas. And the tightening of months prior is already showing up in financial reports. So far this earnings season, results have indicated that companies have focused on driving profits higher without the tailwind of big price increases and sales growth. As of mid-February, more than 3/4 of the S&P 500 had reported fourth quarter results with far more earnings beats than revenue beats. The quarter's earnings measured by a composite of the S&P 500 companies are on pace to rise nearly 10%. Revenues, however, are up a more modest 3.4%. It says, while companies drive for higher profits, it's new. It isn't new. See, I told you I'm not a good reader. Higher profits isn't new. They have made bolstering the bottom line a priority this year. Downsizing has rippled across the tech industry as companies followed leading of Meta's 2023 cuts, which many analysts credited with helping the social media giant rebound from a rough 2022. Hey, I'll tell you what, I'd love to see Facebook go down. Would you? Type 3 if you agree. I have an idea, okay? Give me a quick sec. I'm gonna see if anyone types 3. If you want Facebook wiped off, I have a plan. Type 3. It says here, in recent weeks, Amazon, Alphabet, Microsoft, and Cisco, among others, have announced staffing reductions, and layoffs haven't been contained to tech. UPS said it's axing 12,000 jobs. Real quick, since everyone's typing 3, this is what I need you to do, and you'll laugh all the way to Facebook going closed. Join Facebook groups. Go to Facebook groups and find groups about money, real estate, finance, economic stuff, and join them. Just click to join. And you take a video like this and you go, I think this is pretty cool. And you paste it in there. And all of a sudden, hundreds of thousands of people that have no idea what's going on, they go, what? And then Facebook's like, crap. I'm not joking. It works amazing. If you could do that, tell me out. And do it from the Economic Ninja channel, this channel, and this channel. Hashtag this will make you rich. I want this trending. We're going to teach people. We are going to change the financial frequency of the nation. I'm not joking. I'm so fired up, it's insane. I like have a new lease on my motivation and my excitement. Every day I'm getting a new lease on life. I'm not joking. And I want you to have that same lease. It says here, Warner Brothers Discovery has slashed content spending as headcount as part of a $4 billion in total cost savings from the merger of Discovery and Warner Media. Disney initially promised $5.5 billion in cost reductions in 2023, fueled by 7,000 layoffs. The company has since increased its savings promise to $7.5 billion. An executive suggested in its February 7th quarterly earnings report, it may exceed this target. Listen, these times are serious. Are you going to take them serious? Are you going to absolutely crush it? Are you going to dominate it? Everybody, say thank you to Neil and to Carlos for moderating this video. I thank everyone for watching, everyone for sharing these videos. You are all amazing human beings, and we are going to absolutely crush it together. Ninja Nation is a nation of people around the world that are prepared and not scared. Let's change this nation and the world's financial frequency. All right, that being said, last week, Friday's last day that the Side Hustle course will be $199, and please go check out the new channel on YouTube, This Will Make You Rich. Please hashtag it down below. Thank you so much, everyone. The Economic Ninja, I'm the real estate ninja on this video, is out.